And this is very important because if those documents are not correct, and if you're not managing your cash well, you will have the effect of what's called piercing the corporate veil. And what that means is that the IRS court can rule that your business liability protection is void and it exposes all of your assets to any kind of suit. And it's all because you have commingled money, you have commingled assets with the business. So you've actually joined assets, which joins liability. And then when you get sued, you then say, no, I'm an LLC. I have limited liability protection. But the problem is you've tied everything together. You want to untie it when it's convenient, and IRS is going to say no. So we want to be sure that we're not putting you in a position to take on that level of risk that truly erodes your liability protection and exposes you to problems personally. The next thing we're going to do is organize investment and retirement planning strategies tailored for business owners. Now, that may mean things like the traditional business retirement sponsored plan, like a 401k, or a defined benefit plan, like a cash balance plan or something like that, or a 403b, or a solo 401k, or a SEP IRA, or a simple plan, something like that. We're going to possibly look at those. But the other thing is that for a lot of business owners, the business itself, that business value is kind of like their 401k because it's building value over time. And then at some point, they're going to start to liquidate it to fund their retirement expenses. And so we want to be sure that any which way that we're looking at the future, that we put the right vehicles in place to help you do that in the right way. All right.